Hello everyone, welcome back to my channel, and I'm making some new video today. So today I will be talking about Trading 212, about my portfolio for May to June 2020. And before we do that, I'll just tell you that I'm giving away free share when you sign up. Just deposit from £1 and then there's a link below. And so let's check my portfolio. So we're looking into my portfolio. So basically, before I tell this, this is my portfolio. This is for entertainment purposes and not a financial advisor. And if you do like the share, and I always want you all to just do your own due diligence, always do your own due diligence before purchasing any share or any investment product you do. And so we look at today. So you can see that I actually invested £252.31 during this portfolio I have, and you can see the return I got. So you see the number for my portfolio is 373. That's not how much that I didn't put down. £252.31 that I put down, and then the free cash I got in returns is £120 and add it all up. I only get that if I want to sell all my shares. So basically it's not the money that I make and have in my bank account. It's just telling you how much money that I could actually sell, and it might be a little bit less because when you sell a share the price is a lot different, so it's kind of lower than the price of being listed. So you can see my return is about 47.86%. I really like that percent, and in the future that could grow up to kind of about 2000% in the next 5 years. So I'm looking at more potentially in the next 5 years. So we look at my first share. So AFC Energy is a UK company. They involve mainly in hydrogen, so fuel cell, and I thought hydrogen could actually be the future of energy. Maybe rely less on oil and more on hydrogen and other energy things, what I would say. I don't know what the word I would say, but I got 15 shares into that, and I think at the time I still think it's a bargain, but this is more of a long term. It doesn't pay dividend, and I will tell you that. It doesn't pay dividend, but I thought for during my research, and I thought, okay, I will do that. So we go back, and it's also got a healthy debt, about 35%. So my next one is Airtel Africa. So Airtel is an Indian company. Well, it's been listed on the Nigerian stock exchange. It's also listed on the London Stock Exchange. So you can see that the share I got in that company is 7.35965 shares. So why did I invest in? Why invest in this company, and also people look at this company, and also people look at the vulnerability of this company, because basically if you look at Africa and her country, corruption is the number one, but corruption is declining in Africa. So I thought that would be the future. But also telecommunication is starting to improve a lot in Africa, and a lot of people have their phones, and a lot of people use payment by their phone. A lot of people don't have bank account in Africa, so the telephone communication company does actually have the goal of actually be the future of its growth in Africa. So I didn't look at what's going on in the negative thing about Africa. I saw this could be a potential growth for Africa, and this company, even though it's an Indian company, but this is a company that I see that in the future this could actually make African development to be one of the strongest. So at this moment, yes, it's undeniable. And I think when people do actually do some more research about this company and research more about Africa, Africa is not only just a dark continent, it's never been a dark continent. It's a continent I think people need to explore more. And this is the sort of company I would actually invest in, because I think in the long term, Africa will be a potential growth in the future. So yes. So we go back. This is the 2 free share I got, American Airlines. I don't know if I have mentioned this. When I started on stake, I bought 2 American Airlines shares and I sold it. And I know I sold it as a loss, but I thought, you know what? I will offer to use it for a dividend payment. So thank you, Trading 212, to give me 2 free shares by 2 different people. And why I say thank you for Trading 212 and also the people who refer to my link, because not a lot of investment portfolio, not portfolio, a lot of investment company give out free shares when you refer your friend or refer to someone who are into investing. So you can see 2 share, you can see that I gain over 26.92%. So it's American Airline. It really got balance, a bad balance sheet, but I think it's because they bought some new airlines, and not only that, because they're not flying at the moment. I can see that debt to be decreasing, even though they went to the bank and they got some more loans. But at least I think when this pandemic is over, I think we will see American Airlines can grow in profit in the future. So yes. So we go back. Aston Martin. I did put a gamble about Aston Martin, and yes, this did decline a lot. And I bought it near to the bottom. So if you see, I got 11 shares. So I bought it at 48.84 pence, so that's about 48 pence I bought per share, and I can see a potential growth for this. I know a lot of people might be thinking, why did I bought this share? It looked like a bankruptcy company, but I see a potential. I can see company can transform itself. It might take longer, but if you believe in something, I think Aston Martin could actually go back up in the next 10 years. It could actually go back to £20 and so, but I don't see this grow into the 20s or £15 at this moment. So if it transforms in the future, I think this is a great buy. I will always say to people to do your due diligence, but see making some motorbikes, and I think there's about 100, and I think there's about 100 motorbikes, and they have a new CEO that's grown a transformation of it. And that's really great because it's shown that this company is different. And I think it needs to have a more diversification drive. I think Aston Martin need to have a diversification drive. I think that is a possibility for the F1 into cars. So yes. So the next one is Cinema World. Well, cinema is not actually open yet. So at this moment, I'm actually in profit. I got 4 shares. We took some more before the price actually did go up. Well, basically, it did went down. So I'm near close. I'm near close. I can buy some more shares. So it's still undervaluable. People will actually go to the cinema in the future. As about next week, I think people can go to the cinema in the United Kingdom, and that would be great. But also, this is a company that actually is an international company, and so telling you they are across about 10 countries. You can see some of the majority of them are really like that. But actually, they do expand to other territory, mostly in Eastern European countries and Central Europe country, and I really like that. So if we go to the next one, the Crystal Pharmacy. I bought this when it's below. This is the growth stocks. So I bought 2.1 shares. So you can see the return. It's 84.62%. Well, with my Trading 212, basically I'll just use it as a growth stock mainly. So I do have dividend stock in different investment portfolio. There are some dividend investment in this app as well. So yeah. So we go down to Devalue Rouge. Now if nobody knows what Devo Rouge, they make legal documents. So any paper document they do all legit of that. So I got 3 shares into this company. So yes, it went over 100%. They do pay a dividend, but at this moment it's a suspension, so they're not paying dividend at this moment. But I saw this at this moment, but I saw this as a future potential. I thought, you know what, invest in something that I think to have is money. So I thought, you know what, they are still making money, and yes, we are going to be a cashless society, but they do other things. So the so the worst thing about Devalu Rouge, and not the worst thing, what they actually miss out, they used to make passport for the UK government, so they lost that contract about a year ago, 1 year or 2 years ago. It made them suffer. You can see why it's in a downturn a bit, but it is growing. You can see kind of like a V-shaped recovery, so if I put it as, you can see it's going up. And so the 3 months, well, basically a year, it looked like a V shape, but it's more of a U shaped recovery for Devo Rouge. So the next one is Full Cell Energy. As I said, I'm into hydrogen and the future of technology. I bought 5.84091 shares, so I'm in the negative at the moment, but well, basically what I said, that in the future, hydrogen could be the future, and I thought, you know what, I love investing in the future with these companies. Yes, it's new and so, but that's the potential that I really want to invest in. And if you look at sheets, you can see the debt to asset very low, 59.34%. I do like that. That is still low, not really high, and so. Next one is Hugo Boss. The reason why I bought Hugo Boss shares, I do like the company of Hugo Boss. I think it's a fashion design, but you know what? I kind of want a piece of it instead of buying their clothes, but I want a kind of piece of it. So I kind of have 641,276 shares. So I put £1 into that at negative 3 pence return. So if we go into let's say a year, so at the moment it's €25. So if you look at this, it was 42.39. So I will officially will double my money when the share go up. This company do pay dividend, so that's a great thing about this company. So we are going to REITs, and I know a lot of people say they love taking high risk. So I'll pick Hamilton. So this is a REIT. If you don't know what REIT is, it's real estate. So this is a REIT. If you don't know what REIT is, it's real estate. I forgot what IT mean. So it's actually like an in-depth funds of real estates. So I thought, you know what, I put 3. So 3 shares into this company. So officially, I'm actually in return. Let's see if they pay dividend. They do pay dividend, 11.61%. That's really great. So another 3 share I got when I sign up. This is the 3 share I actually got referral by someone else. I'm not going to sell my 3 share because I thought, you know what, I got a 3 share. I will keep it unless if the company is going into bankruptcy of insolvency. I will officially sell it before that actually happens. So this one's due about $9.41. It's 1 share I got, and actually I mean mine is 33 pence. If you're looking down, HP is actually a computer company, and they do pay a dividend of 5.18%, and that's really great. So my next company is Hostelworld Group. Well, at the moment, what is going on with this pandemic, I think this share, I got it near the bottom, and I'm still in profit at this moment, and I realise that. I bought 5 shares into this company. It's about 20.97%. And looking down, they pay a dividend at the moment, about 4.90%. So let's go back. Now, this is a company that is officially now into administration, but I took a high risk and I thought, you know what? And I don't want people to, if you're new, to not to invest in this company because this company is high risk and I don't want people to lose money. But for me, I love taking extreme risks. It was only one of my few extreme risks I am taking is issue properties. So this is mainly about shopping malls. So they own most big shopping mall across the United Kingdom and some in Spain. So at the moment it's about 1 point. So the share got about 53 thousand. Well, it's 33,817 shares. You can't buy into this stock because they're officially been not dislisted, been suspended by the London Stock Exchange market. So I still kind of have this. So I put a bet onto this to see if it's on. You can see they have a high debt. Yes, they went into mitigation, but it could actually hit and miss. And so if I tell you one company like American Airline, that's other company that actually went to mitigation, but they got out of bankruptcy and mitigation and so. But I got kind of about 10%. This company could survive. Who knows? We don't know. So all I said is I love taking high risks, and so I love taking high risks, and so my other high risk stock is Kaifu Minerals, and this is about the share I got is about 690.7,894 shares, and this is mainly about gold exploration in the East Africa and the Middle East. This does not pay dividend, and that is a future company I might be looking to see growth in the future. My next one is Garters Minerals, and I got about approximately 22,000 shares, mainly exploring and developing mineral area, and they're looking at for these, so mainly the material for batteries for doing in Mali and Cote d'Ivoire, and they also do gold exploration as well. Next one is this word is con in as well. Next one is this word is con in Calkin. If you actually Dutch, you might know what this company is. It's BAM Group. So I've got 10 shares into this company. It does pay a construction company in the Netherlands. They are a global construction company. And I thought, you know what, it's €1, so I invest in that. My next one is the London Stock Exchange. And I thought, you know what, nobody ever invested in the London Stock Exchange. So I thought, you know what, let me invest in this company. And it's very low. It's about £83. I didn't put £83, I put £1 in. So it's kind of 0.01191 shares. And they do pay a dividend. So I get a cut out of, within that share, I'll get a cut of that. So the dividend is about, dividend yield is about 7.87%. So if we go to the next one, Marston. People actually said, "Oh, Marston, why are you investing into Marston?" Good point. I did actually invest into Marston because I had 29 shares and I bought it at 35 pence, 0.47, and I'm up in 65.89% return. And they do pay dividend, and the dividend yield is 7.58. They are pop change, and why the price went up? Because they are working with Carlsberg, a partnership with Carlsberg. So the future is bright for them. Next one is McDonald's, and this is the company that I thought in the future I might actually invest into this company more. I ended up put 15p into this factual share and a 0.01 share, and they do pay a dividend of 2% dividend yield. Now my bank of the day is Metro Bank, and it's undefeatable. Let me invest in a company that I actually bank with. So I thought, you know what, I could see the potential because it's actually the first UK bank of the first UK new bank over 100. You know what? They want to be a challenge bank on the retail space compared to Barclays, HSBC, Lloyds, and I thought, you know what? I'm investing in this bank because it's new and I love the brand, so I put 13.3 shares into this company. That's how much share I got. They did not pay a dividend, but in the future they will. So here we go. This is my next company I love. Is Mirror Advertising. It's gone up. It's about 40 shares, and it returned about 26.83%. And this company is the future. Now, if you might watch Netflix and you watch like an old program, and let's say, example, a product replacement wasn't there about 20 years ago. Now, Netflix, you watch the same film, and you say, you know what, I've not seen that product replacement there before. This is a company actually put product placement in everything. It's also reduce company like Netflix to lose profit advertisement. So yes, what they do, and I do like that. That's a new skill, and actually I do like that. That's a new skill, and actually people who might watch one film is thinking your film show a different advertisement than mine on Netflix, and if Netflix found a way that how to make money or studio to make money, I mean, good on them. I really do like that. That's the future of long term. My next one is Moody. Now, if you don't know what Moody is, it's actually a credit rating company. They actually credit rating businesses and countries. They will score, for example, the United Kingdom, it would be about AAA minus at the moment, and that's what they do. And I thought, you know what, I like invest a global company, so I actually invest in net of a pound. So it's about 0.00446 shares I got in this company, and they do pay a dividend of cent. My next hydrogen company I really love and is Neil, a Norwegian company, and I thought, you know what, the future is actually hydrogen. 100% you know in this video, hydrogen is the number one thing. I got 10 shares in this company, and I thought, you know what, I invested into this company because, you know what, this is, as you know, it's all about hydrogen. My next one is New Ribbon Wheat. Invest hydrogen. My next one is New Ribbon Wheat. Invest a little into. So I've got 6 shares into REIT, and they do real estate. 6 shares into REIT, and they do real estate and also business real estate as well. So it's mainly retail and leisure looking at mostly. So I've only got 6 shares and see how much dividend they pay. 24.70%. It's the next company. My next company is Nikola. So I actually invest into this company beforehand. It was about $23.64. And the shares I got in this company is 2.59 shares. They are a hydrogen company. Also, they do battery as well. What they're doing, they are making vans. They're making a 4x4, and what I mean fans, well, in the United Kingdom we call them lorries. So to make everything all hydrogen, make the future is hydrogen, make it more healthy. Goodbye oil and gas, not gas, mainly oil. Goodbye unhealthy oil. So I actually bought into Nikola Corporation for 2.59 shares, and the return is really great. I wish I bought some more before the price actually gone up, because 85.65%, they don't pay a dividend, so in the future they might do. The next one is D, so it's a petroleum company. In the future they might do. The next one is D, so it's a petroleum company. I got it as a bargain, even though I didn't pay a full dividend. Not dividend, sorry. Didn't pay the full share of this. So they do pay a dividend of 0.22%. The next one is Powerhouse Energy. This is the company who pay a dividend of 0.22%. The next one is Powerhouse Energy. This is the company, I think this could be the future. So basically, why did I invest in Powerhouse Energy? Because of one thing. When you see wasteful plastic and you want to recycle them and you can't recycle them, this company will use this waste plastic into energy, and I really like this sort of thing. That's the future, is innovation, and innovation is the companies could actually be the future growth. So I bought 202 shares, so 212, trading 212, yes, that's correct. And the return is about 146.08% return. They're actually looking at to sort out the factory. They're planning permission at this moment. So this will be up and running by this year. So yeah. Next one is Premier Oil. I thought, you know what? I'd take a bargain and say, you know what? This is kind of my short term. That when it does go like 100 pence, that's about £1, I will sell it. So this one is 7 shares I got into it. Return is 74.76%. They do not pay a dividend, so yeah. Next one is SIG PLC. I got 10 shares into this company, and it's about 48.33%, and they do pay a dividend of 3.99%. That's the yield. Dividend of 3.99%. That's the yields. Tesla, I'm not really a big fan of Tesla. I think after I see Nikola with hydrogen, and seeing the battery, hydrogen or battery, Lennon battery, I rather choose hydrogen. Quicker, about 10 minutes to fill your car or your lorry or your farm. Take about 2 hours, no way, or 1 hour. 0.002 shares. They don't pay a dividend. Disappointing. Disappointing. Next one is Tower. I got a free share of this. So this is a cannabis company so I got 1 share, so I got a free share by someone signing in now. It's a pharmaceutical company supply of cannabis. I just see they don't pay a dividend, so yes, it's going down. This one is called Hygiene. So they are merging. So this will be kind of doing lorries or vans, as we call it. So it's called Torsen. It is actually merged to Hygiene. I want to tell people about this company because a lot of people will say it's high. This is a sort of different gas, and it's called CNG gas. So they are using CNG to drive around. So CNG is a sort of natural gas. One of the healthiest natural gas. So they're running on to that. So I kind of got one share, but I got this today, so it's gone up £4.90 before. So I kind of got one share, but I got this today, so it's gone up £4.90 before it's merged, and I might sell some. Let go back. Next one, the Tolo merge, and I might sell some. Let go back. Next one, the Tolo oil. Got 10 shares into this company. Before that, yes, I'd pay a dividend. Dividend is 5.96% in yield, and return is officially 75%. So the next one is my other 3 shares. Virgin Galaxy. Someone refer my link. $15.42. It's went into the red. Got 1 shares. They don't pay a dividend yield, so that's disappointing. But in the future, space travel will be the number 1. One I really like, William Hill. William Hill won their VAT court. I'll call it a court. They won to get their VAT money back. So that's a good thing for the company to use that to reinvest in their company. So 7%. So my last 2 shares, and I will tell you, this is a E. So my last 2 shares, and I will tell you, this is a ET. About the buy this because you see me bought it, and I thought, you know what, I bought one, and thank God I didn't buy more, because basically what happens is it's a one ETF, and that I didn't buy more, because basically what happens is it's a one ETF, and that the case. But you know what, it is growing. It doesn't really track the WTI crude oil that much compared to the pay services as they do. And the last one is Extract S&P 500. So that's Standard & Poor's. If you want to know what S&P is, the Standard & Poor's 500. So when the not the economy, when the share price of all the S&P 500 go into negative, you might see it on on business channel to see, oh, the stock market went up. The S&P 500 went up to 5,000%. But if it went down to, example, minus 50,000%, this will go up, and then I can cash it out and say, you know what, that's how much I get. So I'll show you. So on the 24th of March, it went up to €2.35, and now it's minus 0.97. So kind of in the green, but I'd rather to get it down so I can just buy some more. So yeah, that's everything. So you can see the pie chart before we go. And as you see, it's on nuclear, and it's very diverse, both growth and dividend stock. So yeah. Oh, John. So yeah, the company I bought today is now second, overtake American. So yeah. Thank you for watching my video, and I'm sure that everyone will be educated of what I'm doing. A quick reminder, remember to do your own due diligence. I'm not a financial advisor. So basically, yes. So if you really want to sign up to Trading 212, there's a link below, or even look at to my whiteboard. Yeah, that's correct, whiteboard. I was going to make a video about a card with about curve card, But I thought, you know what, I'm not going to do a review of Curve Card at this moment because what happened in the news about Wirecard. And Wirecard is a German card issue company and also a fintech company, basically a financial technology company. So what happened is that there was some scandal going on in Germany at the moment with that company. So they're now officially insolvent. So the company is no longer running. So it's affect all Curve Card. That is because the card issuer for them is Wirecard. So it doesn't affect Curve, but it's only affect with their cards because their card is officially made by Wirecard. So I would do a video review of them after this issue is already gone. So yes, so thank you for watching my channel and thank you for watching. So just follow, subscribe and just give me a like up and see you later. Bye.